Hello, Smart Money Tree podcast listeners. Welcome to this week's show. My name is Kirk Chisholm, and I'll be your host. So today I'm joined with Ladislas Maurice. How you doing today?
Good, good. How are you, Kirk?
Good, good. Well, we wanted to bring Ladislas on because obviously with the election, we have a lot of people who are thinking a little bit more externally and looking at options. And so we wanted to bring him on to just kind of talk through his experience. So talk a little bit about your experience and kind of what brought you to where you are today.
Sure. So a bit of background. Went to college in Canada, then did my law and business school in Australia, and then I had an expat career in Switzerland and Africa for Nestlé, the big food company. So I worked in Africa for 7 years. I spent most of my 20s in Africa, actually, with my last role being on the executive board of Nestlé Ghana in charge of the dairy business for a few West African countries. At the age of 30, I left, and now it's been 8 years that I travel around the world full time, investing in emerging market stock markets, investing in real estate all over, and looking at residency and citizenship solutions for people. So I've been doing this for 8 years, managing my own portfolio, and then offering and showing solutions out there for people as well.
Nice. So what are your I mean, you say you're investing around the world in emerging markets. Um, how do you look at the world opportunistically? Like, what
Sure.
is your what's your lens?
Sure. That's a good question. So in my mind, there's always a map of the world. It's a map of the world with all its macro elements and geopolitics and everything. And when I spot a macro opportunity in a specific jurisdiction, then and I think, okay, there are interesting developments in this country. Let me go see how to play it. Because in most countries, it's not as obvious as in the US or in Europe, where you can just buy stocks, etc. In a lot of countries, it's more complex. So I'll give you an example. If about, I don't know, 7 years ago or so, Uzbekistan, a country in Central Asia, was opening up. So they had had the Soviet Union, and then the same dictator had kept power, and it was still very much communist. And then he died, and he was replaced by a new president who just opened up the country to foreign investors. So when I saw this, I thought, wow, there's probably a lot of value. So I went there thinking I would want to buy prime real estate in the capital city in Tashkent. I went there, I met with lawyers, real estate agents, expats, local business people, etc. And then I stumbled across the local stock exchange, which is not liquid, which there are barely any foreigners investing there. You can't find that on interactive brokers or anything. It wasn't even on Bloomberg. Um, and then when I looked at some of the valuations of these companies, some of them were spitting out double-digit yield dividend yields. They were they had no debt on their balance sheet. They were growing 20, 30% a year. So I went to Uzbekistan hoping to buy real estate, and I came back with a brokerage account. Sometimes I see countries, I go there and like Serbia a few years ago, Serbia had a very interesting position in Europe, being between East and West, playing off the Russians, playing off the West, trying to be a bit neutral, doing business with both. And when I went there, just, real estate was way too expensive, and the stock market was practically uninvestable because, for example, you can buy stocks, but then if you sell the stocks, they won't let you reinvest anything or take the money out of the country until you filed your capital gains, your income tax return the year after and pay your capital gains. So things like that is just not investable, right? So it just depends, Just I go where the opportunities are, and then on the ground, I investigate and I ask myself, how do I play it? Sometimes there's a way, sometimes there isn't.
Yeah, that's interesting. And I'm curious because I remember must be like 15 years ago. I was looking at one company, and it was in Mongolia, and it was a real estate company, and they were doing some development. And it was fine, but what I didn't realize was how much of an influence China had on that. So when China went into the doldrums, Mongolia did too, to many, many regards. So how do you account for a lot of the cross currents with different countries unless you're, really um really adept at navigating that? I mean, I know the US well, and I still struggle to figure out like who's doing what with all the politics, and you got a new administration changes all the rules. So how do you do that when you've got multiple countries of things that you're not intimately familiar with?
Look, the key is being diversified. Would I go all in Mongolia? No. Would I go in all in Uzbekistan, Serbia, Colombia? Absolutely not. The key is to have exposure to different markets, and to be reasonable in your approach. And that's how you essentially hedge against bad things happening. The reality is when you invest in emerging markets and frontier markets, there's inherent volatility and risk, which is higher than investing back home. So things will go wrong. I mean, I can tell you at any given point, there is something blowing up in my portfolio. Like just there's a catastrophe in my portfolio at any given point. But I also know because of the level of diversification, there's always something that's doing great. So I'm just comfortable with that level of volatility. Um, and I sleep well at night because of the diversification. But if I was all in one of those jurisdictions, I wouldn't sleep very well for sure.
Okay. So thinking about risk, the dollar has a lot to do with risk, right? Emerging markets and the dollar, there's a very strong correlation. Strong dollar, weak emerging markets. A lot of their debt's based in dollars, which is a problem for them. Um, so I would imagine that's probably a big factor that goes into your calculus. Does that
Yeah.
play in? Like you have a lot of currency, cross currency issues. How does all that play in?
Yeah, I mean, you can sometimes play it. So I'll give you an example. In Egypt, the Egyptian pound is a currency that constantly devalues. Every 2 years, they have a sudden devaluation of like 30, 40%. But you can buy real estate in Egypt off plan with payment plans fixed in Egyptian pounds over 8 to 10 years. So I've had a bunch of clients, they bought apartments in Egypt a few years ago with 8 to 10 year payment plans fixed in Egyptian pounds. In the meantime, the currency is down about 60%, and so are their monthly payments. So you just need to take that into account and then and see how do you work with this.
Well, that sounds like a great deal. Does that mean
Yeah,
that the price is does the price stay static and you're basically your mortgage is getting devalued away over that 8 to 10? I mean,
yeah,
basically it's kind of devaluing away over 8 to 10 years.
yeah. But then the property itself is still worth just as much.
Ah,
But then,
okay.
if you go into Egypt, then some countries are easy to invest in, but it's not necessarily easy to get the money out because sometimes they have capital controls and such. But this is really for, going out there into frontier market investing. I think most people, who would be listening to your podcast, they're probably wondering, oh, I want to buy a house, not have all of my assets in the US, have a little bit of diversification. I might want to have something in Italy or in Panama or in Mexico, someplace I like to spend time, have a little bit of rental income. So, typically that would be the first step for people who want to invest in international real estate is just to look for a place that, they enjoy, make their first investment there because they don't mind going back there once in a while to be a bit more familiar with the place. And in some cases, investing in real estate can even get you a residency permit, which is quite interesting as a plan B, or even just to go live. And in some cases, as well as a kicker, you get a free citizenship, a free passport. So there are countries out there, if you invest in real estate, they will give you citizenship to you, your spouse, your underage children. And then when your children have kids, as long as they register the newborn at the consulate of that country, the citizenship just goes down. So there's a lot of interesting plays out there. International real estate is not just the real estate itself, but it can come with some very interesting benefits. Like Panama, I'll give two examples. Panama is a typical one. Um, when Biden came to power, the MAGA crowd was horrified and they wanted to leave, etc. Many just went to Panama. Why? You can either make a 200,000 3-year term deposit and get residency and you can live in Panama, or you invest $200,000 in real estate, you can live in Panama. So that's great. People just went there, didn't have to stay in the States. Now it's the other way around. Trump in power, liberals are horrified. They want to leave. Yeah, Panama, good option. And then you can just go, just very easy. Just a bit of paperwork, $200,000 investment, and you have the right to live, work, everything.
Yeah, you have your own little slice of America, depending on who's not
Yeah.
in power. It'll be liberals for the next 4 years, and then it'll be conservatives and back and forth. That's interesting. What
And it's funny because in some of those markets where it's a lot of Americans that go for political reasons, there's literally a cycle. Um, so now, like in my business, we help people invest overseas, get residency overseas, etc. And during the Biden years, it was most clients were Trump, all that wanting to leave. And now it's just I don't hear about these people anymore. They're oh, we're back. They're happy in the States. Now it's the Biden crowd. They're like, oh, we need to get out. So look, to such people, I would say, sure, go overseas, go live. It'll be a great experience, etc. Just be reasonable, because one mistake that people make when they go overseas is they feel the urge to sell everything and to take all their money out of the US and go, invest it all overseas. Like that's not a very reasonable approach. Um, Step by step, sure, move there, buy a place, etc. And then as you feel more comfortable, then you can reduce your exposure to the US if you feel it's right. But just don't do everything in one go. Rush decisions are never good decisions.
Yeah, no, that's that. I appreciate that point because that's a lot of what I've been telling people in the last few weeks is just don't make a rash decision. You can do both, right? It's like people say, like you said, they're going to sell everything and move. It's like, well, just buy a place and live there for a little while. Make sure you want to move there, And
Yeah.
um, I
Or
will ask,
rent, you
yeah,
know.
or rent. I mean, one thing I'll ask is, you talked about citizenship, which we'll get into a little bit more in this interview, but how does citizenship play in? Because I know citizenship on the surface seems like a good thing, but it can also cause additional issues with the US, and there's some advantages and some disadvantages. So maybe you can talk about that a little bit and how people should be thinking about a second citizenship if they were so desired.
Cool. So I would say that having a second citizenship with the US is not an issue. The US allows dual citizenship, so you can have other citizenships, so that's not a problem. The way to look at another citizenship is to essentially it's a passport to more freedom. So look, when, COVID was happening and there were all these restrictions, people that had either residency permits or citizenships in other countries could still travel and access those other countries. If there are cases of, I mean, right now, Ukraine is a case in point. Um, there's war in Ukraine. Ukrainian men that are lucky enough to not be in Ukraine now, I mean, that happened pretty quickly after the war, actually. They can't get their passports renewed at Ukrainian embassies. So if you're Ukrainian overseas, you have your passport and that's it. So if it expires, you're stuck where you are. If it expires and you happen to be in Canada on a refugee thing, that's it. You're stuck in Canada. You can't go anywhere. Um, if you lose your passport, you're finished. If your passport runs out of pages because of too many stamps, I know Ukrainians, they've been traveling and now they're literally trying to see countries and the size of stamps. And when they show up at a border, they say, please here, because they're trying to save every single page because they know once it runs out, it runs out. But Ukrainians that had a second citizenship, they're free to go around. They're free to travel. They still have this. So it really is a second citizenship is it's two things. One is catastrophe insurance. War with China, war with Russia. There's a draft you managed to get out. The US says if you're American and you don't come back and fight for the country, we're freezing your assets and you are not renewing your passport, you still have like a second life. So you're still good to travel around the world. That's one. And two is opportunity. And not necessarily just for yourself. So, for example, Turkey has a citizenship by investment program. All you need to do is invest $400,000 in Turkish real estate in Istanbul, for example, one of the world's great cities. Um, and real estate's pretty affordable too. $400,000. You just need to keep the real estate for 3 years. You can sell after 3 years, but you get to keep the citizenship. Takes about 1 year to process, one trip to Turkey, that's it. And then this citizenship will be going down the generations, right? So like, we don't know what the world will look like in 50 years from now, 100 years from now. Maybe your descendants will be very happy to have a Turkish passport. Just like now, there's a lot of Americans that are very happy that they had descendants from Italy, from Ireland, etc., where they can claim the citizenship by descent, and then they have full access, and their kids have full access to Europe to study, to work, to play, to travel, to do whatever. So it's really a second citizenship is about one, catastrophe situations, and two, and I think that's the more important one, it's about having a world of opportunity, not just for yourself, but for your descendants and your children and all that.
Let me ask you this, because I know, like Ireland, I think has like three generations you can still apply, and I think I was four, so I can't apply, even though I was, just missed it. Um, what are some of the better countries to have using that lens? Because you could say, well, I could get the Congo, I get a citizenship in the Congo, but I don't want to ever live there. So, some countries are maybe more friendly to this than others, and some countries maybe like Turkey, I would question because it's really in an area which is there's a lot of conflict. So, it's a beautiful city, but maybe you don't want to live in Turkey. Maybe you want something like Canada, which is closer, or South America, which is maybe a little bit more regionally palatable for certain people. So you don't feel like you're going into a completely different culture that you're not familiar with. What are some countries people should consider for second citizenship that are like friendly to this? That are also countries that are I guess the other part is countries that have the ability to travel. Like US, some countries you don't want to have a US passport because it's dangerous to go there. So like thinking from all those lenses, how should people think about that?
I mean, you're asking a lot of right questions, and it needs, strategic thinking, because each to their own, right? Um, if you're not comfortable with Turkey because, you're worried about conflict, which is a very real concern. I mean, it's Turkey always gets into conflict. Just make sure you're not there when it happens, essentially. Um, you just need to be clear with your objectives, and then there are generally passport solutions for each of those objectives. Like an easy win for Americans is just giving birth in Mexico. If the kid is born in Mexico, the kid is Mexican from day one. And you, as the parent of a Mexican citizen, right, and your partner and your parents and the siblings, underage siblings of the kid, and your partner's parents as well. So the whole family, the whole clan, you all get permanent residency in Mexico for life. So you all have the right to live, work, play in Mexico full time. And if you stay there 18 out of 24 months, you can even apply for citizenship. Same thing in Canada, without the permanent residency rights for the parents. But if you have a kid, you go have the kid in Canada, the kid will be Canadian and American. So that's a very nice benefit. So it really depends on what your objective is. Do you want a Mexican passport? Do you want a Canadian passport? You can purchase outright citizenship. So, for example, we sell citizenships from the Caribbean. So, if you want or Vanuatu in the Pacific, if you want the passport of a little country that has good travel rights, but that doesn't come with the all the negativity of being a US person overseas, because often, there in many parts of the world, having a US passport is not necessarily perceived very positively. You can just buy outright a For between 140 and $250,000, you can get a passport of one of those islands for your whole family. But that's just an outright donation. And then you have programs like Turkey, 400,000 in real estate, so an actual investment. Um, but Turkey is a real power. It's a real regional power with a real economy. Um, but yeah, there's some risk. Egypt, you can also get citizenship. $300,000 in local real estate will get you citizenship, you and your family. And one of the latest ones is that was very niche, is a donation of $140,000 to Sierra Leone gets you a citizenship in Sierra Leone, which is part of ECOWAS, which is a bit like the European Union of West Africa, but which means that you can have full access to do business in Ghana and Nigeria, Ivory Coast, Senegal. So very high growth markets, very strong demographics. So that's also a play not necessarily for you, but for your children, grandchildren. When the rest of the world will be in demographic decline, your descendants will have access to markets as locals with all the rights of locals that are still going through good demographic growth. And if you're African American, the price is reduced to 100,000 because they even included in there. They said that if you have African heritage, which you can prove through DNA testing, then the price goes from 140,000 to 100,000. So there's a bunch of programs all over the world, entirely legal, where you can just obtain citizenship. So it really depends on what you're interested in. Giving birth, you can give birth in Brazil if you want Mercosur, or in Argentina, and the kid will have citizenship from day one in these countries, and then you as the parent will have fast track naturalization. You'll still need to spend time on the ground, but you'll have fast track naturalization.
Nice. So how does this, so second citizenship obviously is a lot to think about, and I don't know if there's any great resources for picking the right country, but I imagine there's probably some things. How should people be? I mean, if you think about it, it's like looking at the stock market and say, what should I invest in? Right? Like you're looking at this whole world of opportunity, real estate, opportunities. Where should people start? Because it's a bit overwhelming. I've gone through this years ago, thinking about what country, and it came back with like basically Australia and Canada. And Canada changed my mind a few years ago with their confiscation of funds of their own citizens. And so that's no longer on my list because that's
Not cool.
risk number one. Country is not having any money. So debanking their own people, it was just, yeah, so that they're no longer on the list. But those risks come up, and then you have to change, and it seems like you got to go through a lot of work for. So how do you think about things like that, and then how do you think about opportunities? Because hey, if I'm going to get a citizenship in a country or invest in the country, I need to make sure that there's opportunity there because some countries are on the up and up, and some are on their way down, and that ebbs and flows over time. Um, so it's a lot of work for you have to make sure the payoff's worth it.
Yeah, absolutely. Look, I mean, look, first things first, 95% of people don't need to do this. Right. If it's only once you start having enough money that it starts to make sense to diversify internationally. Until you've hit a certain level, there's no need to go venture in some, real estate in Italy and Mexico and all that. Just focus on your local market where you have a competitive advantage, where you have access to financing and credit, which you do not have once you venture overseas. Once you venture overseas, it's they're cash markets. So you can just generally speaking, um, when I have specifically Americans, Canadians, different story. But when Americans contact me and they're like, I want amazing returns. Generally speaking, if you play your cards right, there's always some little town in some state in the US that's doing great, even if there's a recession. So, do your research. There's always one part of America that's doing great. And you'll have access to bank lending. You'll understand the environment. Property management will be easier. So if you want to make money, just stick to the US. really, once you go international, it's about the diversification aspect. It's about not being all in. So then it's about having a discussion, um, about really what are truly your objectives. What are really your objectives? What is your risk appetite? And then from there, we can decide on which jurisdictions are right for you for real estate, residency, citizenship. But, fast, easy money? No.
Do you think that if people are investing internationally, do you think it's better that they stick with real estate or that potentially looking at businesses or international stock markets or local businesses are kind of a better path? Because I know that people have invested in certain international countries and then they realize they bought a condo for 250,000 and they go to sell it and it's worth 100,000 because they overpaid. So, which I know is common, but what should people be looking at? Is real estate easier or is because people don't speak the language sometimes too and they don't know the um
Both are
the
options.
process. But
They're
I mean,
they're
should
both.
people be considering businesses in other countries? Like that's because that's a bigger lift sometimes.
I mean, going into private equity and venture capital in foreign countries, I'd say that's pretty advanced. I would just stick to real estate, residential real estate. It's easier, and just local stock markets,
Okay, makes sense.
or bonds, local bonds, etc. Sometimes term deposits can be interesting in local banks as well. But just don't overcomplicate your life.
Okay, yeah, makes sense. Um, well, as we kind of one other piece which obviously we didn't touch on is taxes. So if you're a U.S. citizen dealing with taxes, dealing with filings, what should people be thinking about or at least knowledgeable about in that
Cool.
area?
So first things first, this is not tax advice. Generally speaking, the way it works with the US is if you own property overseas, one, you'll have to pay taxes locally. So you just need a local accountant to file your taxes in Mexico or in Colombia or in Italy. Fine, that's easy. And then typically, again, not tax advice, you get a credit for the taxes that you paid overseas when you pay your taxes in the US. That's typically how it works. So you just want to make sure that your accountant is familiar with overseas stuff. If your accountant never dealt with overseas stuff, just maybe look at a new accountant. But essentially, it's not a train smash. It's not too complicated. You just need to be compliant. If you open a bank account overseas, you absolutely have to declare it every year, something called an F bar. That's it. Just be compliant. It's not too complicated. But, don't think that because you invest overseas as a US person, you don't need to tell the IRS about it because it's not in the US. No, that's not the case. You still need to declare everything.
Yeah, and they're pretty serious about that, so they don't mess around with that stuff. Cool. Well, I mean, I've enjoyed the conversation. Any final thoughts, and where can people find more about you?
Sure. So, thoughts are, I think in a world of increasing volatility, I think we've seen how much the world has changed in the past 6 years, roughly. The world is a crazy place. It's becoming ever crazier. I think that it's reasonable for people that have a certain amount of money to start diversifying into other jurisdictions, to have at least a plan B somewhere, a residency, another citizenship, so that they can go to and give options to their children as well down the line. It's just a very reasonable thing to do. Just again, because there's so much volatility and so much emotion, people need to be reasonable in their approach. They shouldn't rush into anything. They need to choose the right jurisdictions for them, and just do things one step at a time. Because if the next 6 years are going to be as crazy as the last 6 years have been, um, I mean, the last 2 weeks have been crazy. Uh, we, uh, I mean, do we have an alternative to, you know, diversifying? I don't think so. It's because we don't know in which direction it's going to go. So at this point, I'm more focused on trying not to lose too much. I'm focused on really trying to protect, be diversified, sleep well at night, and just move forward with my life. But I don't want to be all in one country, all in one asset class. It's just too dangerous. We don't know in which direction the world's going.
Yeah, I would agree with that. I think diversification is certainly the key risk management tool right now because we don't know what we don't know, and there's no way to know it other than just take a wild guess. So, well, Ladislas, I really appreciate you coming to the show and sharing your wisdom with us. Where can people find more about you?
TheWanderingInvestor.com. I have a newsletter, and I give updates as I travel around the world looking at investment, residency, and citizenship opportunities. And then people can follow me on YouTube and Instagram as well, The Wandering Investor. But the newsletter is best.
Awesome. All right. Well, thanks for coming on the show. I know we'll get a lot of interest in this just because we're getting a lot of questions about this. So appreciate you sharing your wisdom with us, and we'll have you back on in the future.
Thank you, Kirk.
Hey, Doug, did you hear? We're giving away free money. Well, I'll tell you about it in a minute, but before I do, there's a saying in the mining community, well, precious metals mining, that is. The saying is that if you want the best deals, you have to be in the room. Now, you're probably thinking, what does it mean to be in the room? Well, I'll tell you. Being in the room means that you're on the short list of people who get invited to be a part of the best deals. These are the deals that most investors will never have access to. You mean like IPOs? Nope, IPOs are chump change. Those are for retail investors, small potatoes. That's nothing compared to these deals. These deals would have you salivating to get access to them. Once you know they exist, you will never look at investing the same way again. I almost don't want to even tell you that they exist because it will ruin your thinking of how the investing world really works. Now, you might be excited that these deals exist, but you only have access to the deals if you're an insider, or in the room as they call it. Now, as loyal listeners to the show, I'm going to give you a chance to be in the room. Money Tree Investing Podcast has created the Insiders Club. This is a community of our show's members who are loyal listeners of the show and want to get more out of their investing experience. Being a part of the Insiders Club gives you insider status for upcoming events and webinars, discounts, free stuff and books, and influence on the future direction of the show. This is a great opportunity to join us as we expand our content and services. Oh, and did I mention free money? Yes, in the next few weeks, I'll be giving away free money to our members of the Insiders Club as my appreciation for listening to the show. Now, there's no cost to join the Insiders Club. Just go to moneytreepodcast.com/free money today to join the community. That's www.moneytreepodcast.com/free money. I hope to see you in the room. All right. Well, that was a great interview with Ladislas. Really appreciate him coming to the show. Now we're into the panel portion of the show where we have our very own Barb Friedberg. Hey, Barb.
Hi, Kirk. Hi, Phil. Happy to be here.
Glad to have you both. And we also have our own very own Phil Weiss. Hey, Phil.
Hey Kirk, hey Barb, happy to be here as well.
Great. Well, let's get started. So, Barb, what were some of your thoughts from the interview?
Well, I'm really happy to have alternatives in case I consider a move to, a small nation in the middle of nowhere. But on a more serious note,
I recommend Togo, by the way.
I don't know where I heard this recently, but there was someone talking and they were talking about a country and they said, I don't know if this is a real country or not, but we are like very ignorant here in the US about the rest of the world. There are many, many, many countries in the world filled with people that are important and we're not the only place. And so I think that was the point of the interview, not that you necessarily are going to want to invest there or live there, but just an awareness that, yeah, we're not the only alternative.
I don't know. I live in an ivory tower, Barb, so I'm pretty important. I'm from Boston. We got a lot of ivory towers around in this neighborhood.
Yeah,
Yeah.
yeah. How are the pilgrims doing?
Pretty good, pretty good. Yeah, I haven't been down there recently, but they're pretty good. Thank you for asking. Phil, what about you? What are some of your thoughts from the interview, or international investing in general?
I mean, international investing is often something that we overlook because we have our stay-at-home bias. We want to invest in what we know. And so we're more likely to put money into our own markets. And there are a lot of other places in the world, and look, for a number of years that hasn't been successful, but we'll see if it lasts. But right now it looks like it's turning a little bit. And I remember looking at some international and emerging market funds too. And a lot of them are really just investing in companies that might be headquartered in those places, but they don't do business there. There was actually a fund that I looked at, I thought was really interesting because its approach was to look for companies that were doing business in those markets, because that's something we often miss. Like, it's just one of these things that happens when you decide to invest someplace else. If you don't know what they own, you might not be getting what you think.
Yeah, that's interesting when it comes to ETFs, and we'll come back to that. And having the name versus what it is. I'll just mention one that I've always laughed at was Cuba. I don't know if it's still public, but the symbol was Cuba, Cuba. And it was supposed to be companies invest in Cuba, but it was like 90% is Spain, all Spanish companies. So it wasn't really Cuba, but you thought you were getting Cuba, and so to me, it was just funny. Um, so Barb, obviously we talked about a lot of things in the show, and I'm not sure on the interview, and I'm not sure how many people can really apply, but what can people take away from this? Do people just start exiting the country and moving to Sierra Leone and Egypt and buying rental property, or how should people be thinking about this in their own practical way?
Well, there was one thing that perplexed me because he talked about how you can, say, buy an international property and then you get citizenship, et cetera, et cetera. But my thinking was, well, okay, so let's say you own a property in XYZ country and then you become a citizen. Are you living in that property? Are you renting it out? Is it just sitting there vacant? What do you do with it? And he really didn't talk about that. But I think if you're so inclined, you're an adventurer, whatever, you want options because you think the US is going to hell in a handbag. Um, sure. I mean, Stanislaus seems like your guy if you want to explore these types of options. I would like to turn the conversation a little bit to maybe you're a little more conservative and not a gadfly looking to, really boots on the ground internationally. Consider international ETFs to diversify your portfolio.
Yeah, so Phil, you and I talked about this earlier in the live episode, which probably a few weeks before this goes live. But we in one of the live episodes about what's going on internationally versus domestic. I mean, the U.S. markets have been so good for so long, and they're going up every year, and they're the best markets around, and they're one of the most expensive too. But capital is just flooding into the U.S. for over a decade, which is not really all that normal. Um, Tell us a little bit about what's going on in U.S. versus internationals this year. And right now we're doing this March 12th. So we really got the first 2.5 months of the year since Trump was elected, or not inaugurated, but we're looking at what, a few months? We're looking at like close to 5 months. So what's happened since then? Let's talk about that a little bit.
So historically, we have to go back about 30 years, maybe more, to where international markets have outperformed the US. Year to date, international markets are outperforming the US. I don't know if this is going to be a long-term trend. I don't know if it's just a short-term thing because of everything else that's going on. But if we look at regional indexes for the year, I mean, Europe is up 15%. Uh, Emerging Asia and Far East is up 10%. Emerging market Latin America is up almost 10%. So a lot of the foreign markets so far this year are really doing well. They're outperforming the US markedly. During that same time, the US was down. Spain year to date has a 22.9% gain. Germany's up a little over 20%. Sweden's up 20%. China's up almost 20. I mean, so we're seeing possibility that the tide is turning a little bit and international investing could become more popular. So it's definitely something to watch out for. I mean, when we invest in diversified portfolios, we should have an allocation to international. And when you're investing diversified and you're competing against the S&P and you have that international allocation, especially over this last, like I said, 2 or 3 decades, it hurts your returns and you're not going to keep up. Will that continue? Usually these things revert and they change. I can't say for sure that what we're seeing now is going to last, but it certainly is a pretty wide divergence in performance that we have between the US and the rest of the world. I just want to touch on one thing too that you talked about people moving. Just remember that the US taxes worldwide income. Unless you totally renounce your citizenship, you're still taxed on your US income wherever you live. That's just the way the US tax web works. So you can't just say, "Oh, I'm keep being US citizen, I'm going to move someplace else." You're still subject to tax here, so don't forget that either.
Yeah, you mentioned I'm pulling up the global markets for the year to date, and I think India is in rough shape. They're down almost 7%. This is as of I think probably a week ago. The U.S. is negative almost 2%. Saudi Arabia is down 1%. Argentina is down a little bit. Taiwan's down a little bit. Everyone else is doing great, like double digits almost across the board for any developed country. Japan's up 4.5%. So, but generally speaking, like Europe, 20% general. Like I think, we're talking this is 2.5 months. It's up 20%. And so I wonder, and this kind of this will be really interesting because I remember if you look back in decades, there are certain decades where U.S. does better and certain decades international does better, and it almost flip-flops. And then we kind of missed a decade where it should have been international but wasn't, and that was in the tens. So like the 90s was international; they did the best, surprisingly, even though U.S. did really well. The international outperformed. The aughts, U.S. outperformed. The tens should have been international, wasn't. So maybe the 20s international outperform as a decade. Not every year, right? But as a whole. So it makes me wonder because people have been talking about Europe for a long time and how there's so many bargains and it's such a good value. But of course, you got the Ukraine war going on there, and you get all this other stuff, and Europe is kind of you got a bunch of politicians that are ruining it for everyone. What's the phrase I heard this week? The U.S. The U.S. innovates, uh, and Europe regulates is kind of the thing. So like, it's where businesses go to die. They get overregulated. I mean, you don't hear a lot of innovation coming out of Europe. Now, there's some good things about Europe. It's not all bad, but if you look at it like, where are the opportunities? Yeah, I mean, there's some great companies over there. Great companies, global companies based out of Europe. They're doing very well. So I don't know. Maybe this is the new renaissance out of Europe, and it's probably the last thing you'd think with Trump doing all the trade tariffs and the trade wars potentially on the docket. You'd think, oh, well, it's a terrible place to be, but yet here we go. Best by far. U.S. markets are down, and international is doing great. So I don't know. It's fascinating to me how many times the markets do the exact opposite of what you think they're going to do. Obamacare, oh, it's going to destroy healthcare. Hospitals, insurance, everyone made money when Obamacare. All the companies made money in the healthcare sector. They just went through the roof, right? Obama got elected. Oh, guns are going to go away. Well, gun companies did great, right? It's almost always like you just think of like what's the rational thing and do the opposite, and that's how you make money. It's crazy to think about, but it happens more often than not. Um, so it's what we call the second level thinking. Howard Marks talks about this second level thinking, which is first level thinking is like what's going to happen, and then there's like the consequences of that action, which are second level. It's a little bit more complicated, hard to discern, but those are usually more accurate. So just something to think about. I think as we kind of go through this and figure out this year what if this is going to continue or just a short blip, but I wouldn't be surprised if this continues. I wouldn't be surprised if Europe is the place to be this year and U.S. takes a back seat. But we'll find out. We'll find out if that switches back. Um, So, Barb, since you obviously have a lot of background in this, but if you're looking at ETFs to invest in internationally, because this is practically what most people are going to do, most people aren't going to go to Sierra Leone and try to find rental property. I'm certainly not. I don't care that much. Um, if you're looking at ETFs, how should people be thinking about this? Should we be looking at frontier markets? Because there's a frontier ETF. I don't know if it's any good. There's emerging markets, there's developed markets. I mean, how should people be thinking about this? There's so many opportunities to choose from.
Well, in my research, and I've studied a lot the comparisons in the ETFs between emerging markets and an all-world ETF like Vanguard's VEU, which covers the entire universe and has a smattering of emerging markets and then has majority developed markets. Up until now, the returns have not been that different. But I want to make it so easy for you. Now, I'm not a financial advisor, so I can say whatever the heck I want and nobody's going to come after me. I hope. Um, and if you are lazy, but if you do believe that, hey, maybe the US isn't the only place to invest and maybe I should get a little international in my portfolio, an all world index fund, which means they invest in a smattering of companies from around the world, from all different types of countries, is super easy, like Vanguard's ETF VEU. Now, I'm not recommending this, but I'm just saying if you want a taste of that, just to give you an idea of what this fund is about today in terms of statistics, it has since 5 years has almost doubled. Okay. This year it has gone up a tremendous amount. January 8th, it was closed at its low of 56. Today it's 61.
It's up about 8.7% as of last week.
Yes, that's exactly what I was going to say. And it's PE ratio. And if you guys have listened to me before, that's a metric that I like. That's kind of a back of the envelope idea of valuation. Is a fund or a company over, under, or fairly valued. Its PE ratio is 16, which means it takes about $16 to buy a dollar of earnings, half of the PE ratio of US stocks. So it's cheap. And add on to that, dividend is over 3%, the yield. So if you think that the US is, I'm not going to say done, but is also going to share the spotlight or turn the spotlight over to international for a little while, put some international, if you wanted just an overall international fund, there's plenty ETFs out there. If you're somebody that's a little more tactical and you think, well, I know a little about different countries, so I want a sector fund. So you might add that to your portfolio in addition to just a globally diversified. Because as Kirk said, the facts and what you think might happen, they don't necessarily play out in reality. And that's why, for my personal 40 years of investing experience, I think it's really a good idea to just be super broadly diversified. Get into a broad ex-US international fund. If you want an emerging markets fund, get into one of those. And then if you want to pick and choose sector funds, do it with a small portion of your portfolio. But the US large cap, it's unlikely it's going to dominate forever.
Yeah, no, I agree. I think everybody's gotten lazy doing Mag 7 and Mag 7 or bust, and they're not doing too well this year. So it's probably a good thing that people kind of wake up and realize there's other companies out there. What are your thoughts, Phil? I mean, if we're looking, I mean, you're a seasoned guy. I mean, would you ever consider investing international real estate or international businesses if you could find good deals? And because I mean, if you look from what I've read, and I have no personal experience, but certain places like Africa, there's tons of great businesses there that don't have access, which is why a lot of family offices do impact investing. There's also a lot in India where I've heard there's tons of like cash-rich businesses just making money hand over fist, and they don't have access to the public markets. And so there's just tons of ways to invest in India. So I feel like there's tons of businesses out there and real estate and opportunities, and we just get stuck in the US because it's just where we are. Is this something you'd ever consider? Is this something people should consider at all, or what are your thoughts?
Direct investment in those things is not something that I would consider. If I want to do that, I would look to do it through maybe an ETF, but there might not be an ETF that does it. But this could be a case where you might want to do something that's more actively managed, where they have somebody that's there with the old boots on the ground that can kind of understand the local market, can know what's going on. I believe wholeheartedly in the idea of having a diversified portfolio, and there's a lot of factors that come into play. I mean, if you're looking for growth, there's a lot, and you go to these frontier countries and these emerging market countries, you would think that they have a much greater opportunity for growth. And the other thing that happens with them, and I remember this when I worked for T. Rowe Price, and I worked with some of the fund managers. I wasn't managing a fund, but I did some of the writing for them and things like that. And they would talk about how when technology that we have moves into a foreign country, it moves in at a different stage. Like if you were to go to Latin America, they don't have telephone poles with wires on. They didn't have that many landline telephones. So they basically skipped right to wireless. And so they have a lot of cell phone towers and things like that. So what happens is the developed world develops a technology, and then as it gets refined, it then gets incorporated or brought into those other countries. So they can kind of skip some of the things that we have, and they catch it at a different part of the wave. But there are opportunities there. I mean, when I worked for Tiro, I wrote a paper talking about emerging market investing, and it's very cyclical. At least it has been historically. And part of that's because the other thing that comes into play when you start to invest in some of these places, they can have hyperinflationary currencies. So the volatility of their currency is great. Like Brazil used to be, I think it was Brazil, their currency, their inflation rate was over 100%. So basically, you only wanted to be paid in cash because there's no reason. And then you got that cash, and you wanted to spend it because the next day it was going to be worth a lot less. So there's a lot of other factors that come into place. So personally, I'm not willing to tie my capital up in some of these places directly. But if there's somebody there that I can trust, that I think can do a good job, and I wanted exposure to them, I would think about it. I mean, for my clients, when we invest in emerging markets, primarily we use I'm going to use ETFs. I might pick where they invest. Like I have some clients that don't want to invest in certain regions of the world, so I'll find ETFs that exclude those. And that's not the actively managed that I talked about, but actively managed also comes with a bigger cost. But if you're willing to do the research and want to do that and get that exposure, you can. But I just don't feel like it's the thing for the regular investor to do on their own. It's too hard.
Yeah, no, I agree. And I think, the one thing I've seen a lot of, because we have a lot of clients who come to us who are looking to get second citizenships and invest in real estate internationally, or, teak farms or whatever people are pitching. Um, I think it's an interesting concept, certainly with the change in administration. Every time we have a change in administration or political parties, we have a large amount of people who want to leave the country, who are claiming, I'm going to leave to me, I always find it funny, the Hollywood people who are like, I'm going to leave the country if this person gets elected. I'm like, good, get out of here. If you're that much of a flake, then leave. We don't want you here. And frankly, I don't really care what you do. So it's not going to change my habits. But, you hear that all the time, and it's like, grow up, grow up. I mean, it's just a bunch of narcissism, as if we care what you think. Um, so, but I do think that this is a very real thing for common people, right? And forget the Hollywood nincompoops. But if you think of like average people, I'm hearing a lot of people who are like, I'm really scared with this administration. What should I do? So, I think having a plan B is a very wise move, um, in general, because it's basically risk management. Now, what we do is risk management. We talk about risk management all the time, as you know, in the show. we do a lot of thinking outside the box for risk management. It's not just like, oh, you just do this 5 things and you're risk managed. No, it takes like thought and interest, introspection and things like that. So it takes a lot of just thinking outside the box sometimes. And this is one of those things. Like, what's your plan B? I don't have a second citizenship. My business partner is a tri-citizen, which God help him during tax season. But I mean, becoming a multi-country citizenship it has its challenges too. It's not just all cake and gravy, and you just plug it in when you decide to leave. Like there are operational administrative things you have to deal with. So, in my opinion, from what I've seen, it's not a bad thing to have a plan B. Um, However, it should be in a place that you like and enjoy, right? And I always thought, well, Canada and Australia would be the best place to be because they're easy, they're US and US like, right? If you go to a country that's culture's too different, it could be a hard changeover. But they speak English and they're US like, and so I thought those would be easy. Well, Australia's next to impossible to get into because they're not taking a lot of new people unless you have tons of money. Canada, I changed my thoughts after the Canadian trucker thing. That was a little bit too government overreaching. So where do you go? And that's always been my question. Like, where do you actually go? Like and I guess I don't really have an answer. Central America, there's probably some places. South America, there's probably some places that'll leave you alone. Um, but it's really hard to imagine nowadays because everything's so global, like where you'd go to escape. And so sometimes the best solution is to stay where you are. And that's okay, right? You can be a prepper in your own country, right? There's a lot of preppers. They don't want to leave, but they think the zombie apocalypse is coming, and so they're prepared in their own homestead. So I think it's good to think about these things when you're not fearful. So frankly, the best time to be thinking about this was probably a year ago before Trump got elected. If he's your fear, right? When Biden elected, the right was afraid, right? Oh, I'm going to leave the country. Now it's the left, or we're going to leave the country. It just goes back and forth. So you have to think about these things before the thing happens, because then it's not too late, but it's like, all right, well, you kind of missed your window to do it in a I don't say a risk-free manner, but in a fear-free manner. Because when you make decisions when you're afraid, you tend to make bad decisions, right? Because you're not thinking. The fear is taking over your executive function, and you're operating on your fear sensor, which is not where your best decisions are made. So I would recommend, if you're thinking this way, just to take your time with it and sit with it. Wait until a point where you're not afraid that they're going to come round you up, which is usually the fear people have, is they're going to come round you up and they're going to steal all my stuff and they're going to do this and whatever it is. You just try to find a time when you're not afraid to make these decisions, because they are big decisions. If you're giving up US citizenship, that's a process that could take years, right? So don't make it on just, oh, this person got elected and I'm going to leave. Like, if you really need to leave, just jump on a plane and take a trip to the country and don't come back if it's really that bad, right? You don't need, so I think a lot of people get caught up in the nuance, but if you're going to actually consider getting a second citizenship and getting a plan B and moving to another country and maybe investing there, start small. Start small. Take a trip, take a week. You like the week? Stay a month next time. If you like a month, stay 6 months, 3 months, whatever it is. Work up to it. Don't just say, I'm leaving today. Like, truth be told, if you need to leave, if they're rounding people up, leave and figure it out later. But that's not happening right now. So if you have the time, take the time and make sure it's a good decision. Because the last thing you want to do is buy a rental property in Costa Rica that you've never been to the country, and you get there and you decide, oh, this place stinks. I don't want to live here. You don't want to do that, right? That's a bad decision. You want to be there. You want to live there and say, hey, I really like this country. This is great. And I especially like this part of the country, and this is where I want to buy a house. Take your time and do that. Make thoughtful decisions. Take a year, 2 years to make this decision. It's a big decision. And you might decide halfway through that I like the country, but I don't want to give up my US citizenship, or I don't want to get a citizenship. I just want to, stay here for 3 months at a time. That's okay too, right? But but make it a thoughtful decision. These are big decisions and they're important decisions, right? And there are a lot of smart people we have on the show who we've had in the past that are really good at helping you guide you through this process. And so if you need help, you can go through our episodes, you can find them. If you guys want to know, just shoot me an email and I'll send you some names. But there are some good people to guide you through the process, helping you figure out the best citizenship. There was a good book called The Passport Book. I have an older version. I'm not sure how frequently they update it, but they have every single country and their passport requirements. It was a great book. I mean, it was like 2,000 pages or something. It was like this thick, but it has every country, and it's really interesting. You go through and just sift through like African countries you never heard of, and like, oh, it's pretty cool. So, um, I would just say there's nothing wrong with it. I think there are people who love this sort of stuff, who go around buying international properties in bombed out, areas. That's great. You can buy it for $1 and maybe it turns into 1,000. It's a good investment. But ultimately you have to figure out a lot of things. And the one thing I'll leave you with, and then we'll give it to everybody to wrap it up, is if you do nothing else, you need to understand how you're going to get out of that investment. If you're buying real estate in a foreign country and you don't know how you're going to get out of it, don't buy it. I can't tell you how many people come to me who say, I have this real estate property in this other country that I bought from this person who said it was a good idea, and now it's worth half. Or how do I sell it? I don't speak the language. Or what's the process? Who do I talk to? Are there any attorneys that do this? Like, the you when you're buying a property from like like a basically a broker, an international property broker, they're going to make it easy. Oh yeah, we'll just take care of it all for you. But when you're selling, they're not there to take care of you because they're not buying it. Someone else is buying it. What's the process? I don't know. It's not like it is in the US. So you need to understand that going in, or don't do it. If you're going to buy it and love it and leave it forever to your kids and it's their problem, that's fine. But in general, if you're thinking at some point you might not want to be there or whatever reason, don't buy it. Just rent. Renting is okay. It's okay to rent. You don't have to be a homeowner. But just think about that, because it's the one critique that I see time and time again from people who come to us and say, hey, I want to do this, or I've done this. Every single time it's like, how do I get out of this thing? And they don't have any idea how to get out. So always know how you're going to get out of an international investment before you get in, or don't put your money to work. Same applies in the US, by the way, but especially internationally, because if you don't know the process could be you did it wrong and you're not even supposed to own it, right? Or something crazy. I don't speak the language. What do I do? I mean, I've heard it all. So just be very mindful of that if you're going to go in there, go into an international country and make a permanent purchase, right? Real estate, a business, hard to get out of those. So just know going in, what is your game plan? How are you going to get out? Or are you just going to lose all your money and just say, I can't get out, and that's just the way it is? Okay, just know that going in. Anyway, let's wrap it up here, Barb. Final thoughts, and where can people find more about you?
Don't assume your kids are going to want what you want. And so if you're doing something for your kids or your legacy, better check with them first. Secondly, nobody knows the future. No one can future-proof themselves. The future is uncertain. So with that in mind, I suggest keeping your life as simple as you can. Invest in a diversified portfolio of assets across the world, from stocks to bonds, and if you want to throw in some real estate, commodities, Bitcoin, whatever, just do it in a small amount. I'm Barbara Friedberg. You can find me on YouTube and at Barbara Friedberg Personal Finance.
Great. Thanks for coming on, Barb. Phil, final thoughts from you.
So one thing I'd just love to add, you said something, Kirk, that doesn't just apply to international when you're making a move. When you're ready to retire and you're thinking about where you want to go, a lot of times people are like, I want to go here, I want to go there, but they've never been there. The same thing applies. Go to that place and don't just go and stay at a hotel that's in the heart of all the action. We have Airbnb and things like that now. Find a place that you think is someplace you'd like to live, and get an Airbnb there and see what it's like. Go stay there for a while, because moving is expensive. Just like Kirk said, selling is expensive. Moving is expensive too. So if you're moving US, if you're moving internationally, wherever it is, go experience that place in a way that it would be like if you lived there before you just make the commitment to move, because it's a lot easier to change your mind if you haven't purchased yet. I'm Phil Weiss of Apprise Wealth Management, and I know that experiencing big life transitions can be stressful. My job is to help empower women facing new beginnings with the financial knowledge and tools they need to make self-assured decisions. My firm's Apprise Wealth Management. We'd love to get to know you. You can go to our website, Apprise Wealth, that's APPRISEWEALTH.com, to sign up for our weekly blog or to schedule a free introductory call. Thanks for having me today, Kirk.
Yeah, thanks for coming on, Phil. That's the show for this week. Thank you again for joining us on Money Tree Investing Podcast. My name's Kirk Chisholm, Wealth Manager of Innovative Advisor Group. We don't just manage your wealth, we make your life better. You can find more about me at innovativewealth.com. And of course, you can find me every week here on this show. You can also check out our show at Money Tree Investing Podcast. On our website, you'll have access to the show notes, resources, and the archive shows. Please remember to subscribe on our YouTube channel for immediate access to the new shows when they're released. When you subscribe to the show, it allows us to get access to some of the top minds of investing in personal finance. While you're here, please leave a comment and question if you want us to address it on the show. Have a great week ahead, and remember, no one will care about your money like you do, so invest in your life.